this week we have the first regional treasury almanac of the month. So what we did is going to highlight the key level for the index across the Asian region. We're starting with the FTSE Asian 40 index, follow up with last year analysis. So what we see on the chart here is quite interesting because majority of the Asian index that we're going to highlight later on is pretty much looking to trade much more higher. But the FTSE Asia index seem to have some little bit reluctant to go higher. I think largely due to large cap in the Singapore's index. So regardless, as you can look on the screen over here, the downtrend line that began since 2018 is about being tested again. So it was tested at least 1 to 3 times for the past 3 years. So right now, we think it is actually possible to trade much more higher. If you look on the momentum, it is stage a breakout above downtrend channel. Cycle has completed some, and you can see at the bottom here, we are using composite index, which is actually complement the RSI over here. So you are seeing a solid breakout move as well. So despite some soft, we call that a weaker candlestick pattern, particularly when you use a weekly chart over here, you've seen a harami pattern. So is there any pullback? I think which is possible, largely due to weaker US performance. So the downside could be kept within the current support. So we expect the uptrend to continue once the selling pressure normalize. Setting set at the key resistance level at 10,800 and 11,140. Meanwhile, support will be seen at 9,620. Now, if you look on the seasonality for the past 10 years, generally the index starts strongly on the first quarter, cooling off a bit on the second quarter. We have some sort of recovery between June and July, weaker performance on August and September before recovering on the last quarter of the year. So you can, I think in terms of the current technical reading, there are decent chance for the Asian region to continue to trade higher, at least in the first quarter. Now on the Malaysia index, quick look, the KSCI appear to be form quite a strong baseline over here, within at 1370 and 1415. So this is pretty much a double bottom pattern, and we are actually on the brink to break the major downtrend line that also began since 2018. So a breakout above 1505 pretty much will kickstart the new up cycle, putting the end of the downtrend in KSCI for the first time since 2018. While it doesn't have a breakout yet, we think there's a decent chance for the breakout to occur, particularly over the short to medium term, when you see a breakout movement in terms of the momentum, and it was being supported by positive reading in composite index. So the next resistance for KSCI will be 1505, 1565, and 1650, while the support remain the same. Major support at 1370 and 1415. Now for the small cap index, the recovery from the I would say June last year low is set to continue, particularly a series of higher structure is pretty much intact. Last week, gain has created a new high structure, and it's actually approaching the 52 weeks high. Winning at 16,916. So on the momentum record, you've seen a solid breakout move on the RSI. So we're expecting the current upcycle to continue with the small cap index set to challenge the multi-year high at 17,550, or the next resistance target at 19,000. Support will be at 15,950. All right, for the Indonesia JCI index, it was trading at all-time high and is currently trading inside what we call that still pretty much bullish. Currently undergoes the third wave. So we think there's a more room for further upside, particularly just back out above the rectangular pattern. The next target will be 8,300. Meanwhile, for IDX, the financial index, it just break the Ichimoku cloud, now trading more on the higher side. So we're expecting further upward movement toward 1562 for the IDX center. For Philippine VISA index is also quite looking interesting. It's also posed the similar pattern as per KSCI. The index set to test a major downtrend line that began since 2018. So we think there's a decent chance for the for the index to trade higher, with the next technical target is achieved at 7,055, 7,520, and 7,890, while the support will be at 6,170. For PCIN index, it's just break the downtrend channel. The new upcycle has just begun. We're expecting the medium term outlook to be more favorable with the next technical target at 10,000 point and 10,880. For SCI index, however, it was pretty much, I would say, still stuck within the consolidation bit. So the index is pretty much ranging about 480 point since I would say 2021. So it has been building some sort of stronger support within 2960, but there's no convincing breakout move above the current resistance again. So we're expecting the ongoing consolidation to continue unless the index has able to form much more stronger baseline heading toward the immediate resistance at 3370 and 3440. For IHS Strix Index, we think the breakout above the steeper downtrend line here is pretty much has kickstart a new upcycle. Follow up with our last year bullish reading on the IHS Index. So, but we're expecting some sort of decline or consolidation. The index could create a new higher structure before continuing to re-challenge the upper resistance at 1180. For SAT index, timely reversal move within the major support sub 61 point Fibonacci level has seen the SAT index could actually stage further recovery. The trend is still remain downward, but we think the interest is pretty strong within the current support over here that could lift the index higher at least near term, heading toward the next resistance at 1515. Meanwhile, for my index, also similar pattern with SAT index timely reversal within 61.8. We expected to rebound to at least 440 point. Last but not least will be Vietnam index continue to trade higher. The next target is actually pegged at 1210. Meanwhile, for HNA index, just break the consolidation pattern. So the next technical target is actually pegged at 225.